Just some last minute adjustments here. How you doing, friends? Ernie here, and this is the last hour of trading. Yep, this is the 0 Days to Expiration website, service, podcast. Well, this isn't actually a podcast. This is separate from my podcast, but this is a separate feature that I'm starting now where we're broadcasting the last hour of trading. And hopefully you enjoy it. It's all based on our 0 DTE process and the way we actually conjure up trades on the last day of expiration for options on the S&P. And the way it works normally is that we have a trade that we normally take on sometime in the morning, usually. And that may or may not work out. Like today, it didn't work out. The other day, it did work out. And then I go live, and I started this on Friday. I go live. That was the inaugural episode of the last hour, the final hour of trading. And this will be the second one where we do the exact same thing, same process, but now we've squeezed the entire process down into the last hour of trading from 3 p.m. to 4 p.m. That's when options expire. So here we are. Oh, wow. We have a lot of people on already. This is great. Really bad echo. That's unusual because I've never had an echo before doing this. Let's see. Testing 1, 2, 3. No, we're good there. Audio looks good. We can turn off some of that background noise. That looks good. So yeah, everybody else says it's okay. It's you, Warren. Sorry. Alrighty. So today was an interesting day. Friday, we had a last-minute dump in the market, and we actually caught that last week. We caught it before it dumped, and then the last minute it dumped, and we thought, or I thought, that today we would have a continuation of that, and we started to, but then the market has started to recover, and we're in that recovery right now. Now, there was a point or a level based on our volumetric analysis that I felt that we would get, or price would get rejected. And it did stop there, but it continued through. And so that's what invalidated our normal trade. So now here we are with an apparent breakout from that level. That level on the E-mini S&P would be 45.65. In the bigger picture of volume profile, that is actually an LVN. Now, there's a particular piece of knowledge that we have about LVNs and the behavior of price as it enters an LVN. An LVN is the absence of volume between two volume nodes. And so that is a place where the market typically does not find a lot of value. Now, for whatever reason, the entire market has decided that in between value nodes, certain prices are no-go zones. Don't know why, but it's kind of like this, I don't know, mass psychosis. But in any event, the lowest point of that well, I call it a volume well, in between two volume nodes, some people call that the LVN. We call it the lowest point. And because LVN sounds, like you're speaking too much jargon. Anyways, it's the lowest point of the volume well. And that typically will provide a go, no-go point. So when price enters a volume well, this is also what makes up, if you were ever wondering, why does the market either trend or consolidate? And what is specific about that trending and consolidating in terms of the market structure, and the market structure being the trades that have occurred, or where the market finds value, where it doesn't find value. And it's interesting that markets move through very quickly in places where historically there has been little or no volume, or very little volume, relative to other places where it's consolidated, which only makes sense because you consolidate, you stay in one range, and you build up a bunch of volume there, and that creates the node. Where there's an absence of the node, a big well, so you'll have like, I don't know, a node here, a node there, and then in between, an absence. And I'll show this on a chart. For whatever reason, when price enters one of these areas, it tends to move through it very quickly, and that's very indicative of a trending market. And this can happen, this is fractal. It can happen in, small time frames, big time frames, etc. But whenever you enter a volume well, price tends to move through it very quickly until it gets to the LVN, the lowest point of that well. At that point, the market makes a decision. Either it's going to continue through or it's going to get rejected. And it's an interesting thing because it is a potential place or level of resistance to that trend, that trending movement, that impulsive move through the well of either continuing or getting rejected. And so that's what I had banked on, that it appeared that there was some sort of top after this long 10-day run that we had in the market. We rolled over the past few days and ended up that way on Friday. And my feeling was that, well, okay, we would test that final well before going back up to the more recent high after that 10-day run, and possibly get rejected. And that was the play for today. Now, it didn't work out that way. In fact, we met that low point, and now price is continuing through. So now we have a trade to consider for the end of the day. Now, will we continue through? Now, typically this is what happens. After you've gone through that LVN, price will continue through to the next volume node. Now, the issue here, though, is which volume node? Is it going to be one that was created recently, or the one that's more historical, that's been around for the last month or 2 months or 3 months? And so that is definitely an issue. And it's the same way with LVN. Sometimes the level that's an LVN in a 3-day view isn't the same level or the same LVN that you see in a 3-month view. And that's, again, that brings it to this sort of fractal nature. You get all of these patterns that appear even inside of an LVN. You'll see that there are actually nodes and LVNs inside there. So if you've ever dealt with fractals, then you know exactly what I'm talking about. So we're really zoomed in on one of these LVNs, and we're trying to decide, well, are we going to move from there to the next node? And the next node would be up around 4,600. And that kind of lines up with a major node, which is actually just a little bit above that at about 4,620. So the idea here now is that starting now, from 3:30 to the end of the day, will we move up to 4,600 or not? Or will that happen overnight and then continue tomorrow? So there we are. There is the test. Now, if I bring online, and we only have half an hour to go. And so what is the trade? So I'll let me bring up a chart. And let's see, bring up the chart. Just give me a second here. Or is it this one? Just a second. Trading view. There it is. All right. So we have trading view. We have the volume profile on the right. And we can see this green line is where we had identified the LVN in the bigger time frame. So if I were to go to the much larger time frame, like a 4-hour, let's see, go to here. So you can see these two nodes, the this T3 node and this T1 node. And then up here you'll see the T0 node, and you can't see the T0 node because it doesn't exist in this view. So we have T1 at the bottom here, this node right there. And then this T2, or what is this guy right here, centered at about 4600, and this one down here centered at about 4530. Price started there, moved up into this green line here, and I'll just expand this green line and bring it out so you can see it. So there's the green line right there. I placed it right at the low point, right about there. Now if you move up a bit, you can see that there's a really a very low point here. Check this out. See that little gap of volume for whatever reason, but I'm not going to consider that the low point. I'm really looking at the shape of this well and looking at the very bottom there. And so that ended up being about 45.65. And that was, in fact, where price stalled today and then finally broke through. Now we're heading up. Now, where are we going to end up? Now, there's a number of features in here. If we zoom in, we'll be able to see these a little bit better. So we know that this is sort of like the bigger node, and you can see it's a nice balance comprised of smaller nodes. So it's one big node comprised of smaller nodes. Here's that low point that I showed you that was hard to see, but now it's very easy to see at 45.75 approximately. And price now went back up to there and got rejected right there. So there we are. Will price move through there in the next 25 minutes, or is it going to just hang out here? Now, if it moves through, then you're probably going to expect it to go right up here to about 45.90, right? If it gets rejected, it'll probably come back down to this previous level. And I would say that this would be the other one, 45.65 would be our other level. But we've had an unusual day. It hasn't been a very energetic day. It is price is sort of grinding up higher. In a day where you're grinding, I expect that grinding to continue. So I'm going to say that the bottom of this well really is our target point, or 45.75, and so that will be where we'll place a trade. Now, typically what we'll do, because the market is moving so slow and we're near the end of the day, we want to get a good asymmetric trade on. So we'll put on a type of spread or an unbalanced fly or even a symmetrical fly that's very narrow, overlapping that point so that we can get about a 1 to 5 or better risk to reward. Now, I don't have my Thinkorswim up to show you that, so I'm going to have to start that up. But it looks like we're moving up. We can target one of two places. We can target 45.75, or we can even target this next node up here at 45.85. Now, we're not necessarily looking to pin that node or that LVN. We're just looking to come close to or enter anywhere inside of that butterfly or that spread that we put up there. We want it to be out of the money when we start off. We want a good risk to reward, but we want to have upside reward just for being somewhat right. If we can pin it, that will be a bonus. All right, let's see here. Now, just because we're doing the last minute trade doesn't mean that there will actually be a trade too. It's kind of opportunistic. Now, earlier, before I came live, I had already gone over everything that I just told you with the group. That it looks like we were breaking out, and that there was a good chance that we would move up into this area. So there's a good chance that several members have already taken a trade there. As a matter of fact, I know that some have. All right, so what I'm going to do is I'm going to create a trade there. Now, another tool that we would use to sort of identify these areas or to confirm that we have a place where price is likely heading towards is looking at volume and open interest. And so what I'm going to do is I'm going to show you that right now. So here's the SPX. 4600 is right here, and you can see, I'll highlight that. That has the largest cluster of open interest of any other contiguous strike at 3,200 contracts, and then the volume today has been 25,000 contracts. Now there has been even more here, which is kind of interesting, even though the open interest is lower. Typically we target some combination of the two. But right now, if you look at this, you'll see that a case could be made that price will probably end up anywhere between 4,590 and 4,600. Actually, a good case could be made that it will end up anywhere between 4,580 and 4,600. So it might make sense to put a fly or what we call a super fly. That's another trade that I'll talk about in another episode. But a fly right in the middle of there so that we can create an asymmetric trade. So let's start off with creating a fly, an out of the money fly. And we'll go to the risk profile. Okay, that looks good. 60 cents. So if I were to get into this trade right now, it's 60 cents with a potential profit of, or $60 with a potential profit of $350. So there's our, it's definitely about a 1 to 6 risk to reward. And so that's definitely within our wheelhouse. Now, it's not very wide. However, we don't have to have it very wide. If price starts moving in this direction, it's going to come over this profit curve. And this profit curve in the last few minutes is rising at the same time. So if we think that price will continue rising into the close, then this would be a good trade. We'll be risking, say, $50 to potentially make $100. Or if it settles right on $45.90, then we could potentially make $350. To increase our odds, we might make this 10 wide. Now, this would be kind of open-ended here just by making one side wide. This is an unbalanced, not an unbalanced, this is a broken wing fly. Now, if we were confident that we were going to continue to move up, which I think we are, this could also be a reasonable trade. The only problem with our strategy here is that the risk to reward isn't there. It's not quite that 1 to 5 that we're looking for. Sometimes we could make the case that in these final hour trades that we could relax that 1 to 5 minimum a little bit, maybe go 1 to 3 or 1 to 4. But I would rather keep the asymmetry there, and if we don't get it, just simply don't take the trade. So this is one possibility. We have a potential reward of 700 and a risk of 150. So given that, we're Actually, we're very close to 1 to 5. So even a trade like this would be acceptable. All right. So that's probably the trade that we'll take a look at, and we'll see if this will move from here. We'll take it right at about 150. See if we can get filled for 150 or $1.50. This is the SPX, so that would be $150 risk to potentially make 800. And if we overshoot, we have some upside protection. If we move towards this in the next 15 minutes, which I don't, I'm wondering if that's even going to happen, to tell you the truth. We've got 15 minutes to go and we're stalling here. Let's take a look at the chart. Yeah, we are stalling. This might not be a trade today. It's as simple as that. So we got rejected right at this low point, the LVN. If you can see that, look at that very carefully right there. I'll move this green line up, to that LVN. You can see it, that low point right there. Price came right up to it and then got rejected. So there's the power of volume profile. It will tell you a lot about the potential behavior of price as it traverses across the profile. We call that the market structure once we've identified all the features of the profile. All right. So I'm going to say, I know that this is sort of anticlimactic. We're here to try to make a trade, but if there is no trade, there is no trade. The trade was that we would continue through once we broke through what we perceived as the bigger picture LVN. But from a bigger picture point of view, if we were to go back and look at, say, 6 months of data, we would see that this would look like nothing. It's just a tiny little data point. It could be that low point of the well, from the bigger point of view, is that's all it is. We've come up and we've hit that low point, and that's where we are. We're stuck. As we go further down and drill down into the fractal nature of this, we see that there was also another small little well that's probably inside of the big well, and it had an LVN and it rejected price. So we didn't have any continuation. So I guess, when you're looking at volume profile and you look at it from that fractal nature point of view, and you're dealing with more localized activity. When I say localized activity, I mean near term. It happened in the past few days or past few weeks, and then big term happened in the past few months, maybe the past half year. You're going to get different views and different granularity of views as you drill down. Now, it looks like, we could be moving up. We're getting a little bit of a reprise. That last few minutes of the market could do it for us. We don't know. And that's happened to us a lot. I mean, look what happened here on Friday with this drop in the last, let's see, what time was that at? Yeah. Well, that was right at 3 o'clock. So that was right at the very end of the market. Let's see, so that was at 4 o'clock. This is an hourly chart. We need to go to a 5-minute chart and see where that was. Yeah, there it is, right there. So that started going down. Let's see, where is it? There it is, right there. It started moving down at 3:15, and then there it was at 3:30, and then at 3:45. And so then here's the close of the market right here. So that was the last hour moving that fast. So will we get something like that today? Will we be moving up into that time frame? And well, there you go. We are now challenging that LVN. Yeah, there we go. We're challenging that LVN. We'll see if we break into this. Let's take a look at our strategy. Okay, so we are currently in profit right now here. Not a lot, probably about 60, looks like $67 or so. And if we can just move a little bit further into here, I mean, it won't take, the gamma risk here is tremendous. The gamma risk, speaking of the steepness of this profit curve as you move left to right. But we would only have to move up another 10 points and we could potentially turn this into a $500 trade. Now, will it do that? Well, let's go back to the chart. So, as I said, well, look, it's gotten rejected there a second time. Well, not even a second, maybe almost a third time. Right there. So, if I were, if I had that trade on, and I don't because I have my hands full here, I can't take that trade. But like I said, I know that there are members within the group that have taken similar trades. And in fact, this specific trade or something very similar to it was taken by a member. We are now just 10 minutes away from profit. It doesn't look like we're going to enter into this. Now, there could be other people that have trades right now that do have this encompassed. I would say that there's probably a higher likelihood that we're going to retreat than go in. But look, I was wrong about this morning, so who knows? And generally, we're taking, like I said, a small amount of risk for potentially a large amount of reward. So is it worth it to throw $150 out there to potentially make 800? I think it is, because last Wednesday that happened to me. I put on a trade for 250. I made 6,000. If you can imagine that. That was crazy. So we are moving in. Here we are. We are definitely moving higher. Let's see what's happening with the chart itself. Yeah, we're breaking through. We are breaking through, and let's see what that looks like on, I think, a swim. Now we're right at the break-even point at expiration. If we can move just, now if we took profit right here, that's now this trade is worth about $150. Every little bit that we move in here, that trade increases in value dramatically. So price is moving. And you can see it there. We are breaking out. So when you cross through an LVN, that is a typical behavior of a breakout. So this is exactly what we would be playing. Now, will it continue into the close? We have 8 minutes left. All right. From the strategy point of view, we're right here right now, and that now has grown to about $190 profit in this particular setup. Now it's 200. If it can make it to here and close here, now, why would it close at 45.90? Well, there's probably good reason to close at 45.90. If we were to take a look at the options chain, we can see that 45.90, well, that's got the highest volume today, 45.90. Now, of course, I would have pegged it going to the highest open interest, which is at 4,600. So there's the thing. Are we going to make it to 45.90, or are we going to pull back? If you go over on the put side, from a volume point of view, it doesn't compare to the call side, and neither does it compare in the open interest. So I think that there's a much better chance that we're going to finish up on the side north of 45.85. And so we've pulled back a little bit. Now we're at the break even. We're still in profit. And it could be that that LVN is just too much to handle. Let's see. Yeah.
New visitor.
Still stuck right on that LVN. See? Now, this is what we would call a rejection. As I said, you know, the typical behavior is to come up to an LVN and either pass through it or get rejected. And we see this all the time. Of course, we're looking at a microcosm here. And that appears to be exactly how we're going to end up. We're at 3 minutes and 53 hours, or 3 o'clock 54 in 54 minutes. We only have about 5.5 minutes to go. Will we pass through here? There's the, you know, to get up to 45.90 is way up here. I wouldn't put it past the market to do that. It can definitely do that. Okay, it's making a move. It's trying to make a move, but keeps on getting rejected.
Returning visitor.
The market's saying no. 5 minutes to go. And all right, so now it's pulling back. Now, if I had a trade, I would have been probably out of this trade. There would have been a few things that options that I could have taken. When it reached $150 of profit and gave us 100% or 125% return, if I had multiple lots on, I would have taken off the majority of those lots and then let the remainder, so that I would guarantee a profit and let the remainder stay there for the chance of pinning this trade. So that's one of our strategies. If you have a smaller account, you probably don't have that option. You don't have multiple lots on. You get in there, you make 100, 150, 200%. You take that profit and you get out of there on a trade like this at the end of the day when gamma risk is so high. So we have 4 minutes left. Will it make another run? Will it make another run? Will it pin the tail on the donkey? So pinning the tail in this particular case would be hitting it right on the short strikes. And for us, that is at 45.90. Now, it doesn't look like it's going to. Now it's well outside here. Now, you see, this is what gamma risk will do for you or do against you. Here we are in just a matter of minutes, and we moved outside here. The profit curve is collapsing into the shape of the curve at expiration. And so the gamma risk is increasing, and now we're outside here. If you had failed to take the trade, now you'd be underwater by $60. So in just a few minutes ago, you could have made $200. All right. So we'll go back to the chart. And will it make one more run? You know, it's already kind of set the path up here, and it's gone as high as 45.78, but not beyond that. I'm going to say that it probably doesn't have, you know, there's only 2.5 minutes left. Once you get down underneath those last 5 minutes, usually don't see any big moves happening. Once it's made that big move within that last 5 minutes, which it has, that's usually it. It's petered out. And so, in fact, this is what's happening. We've come right up to that LVN, and it's getting rejected. Getting rejected. All right. Let's bring the big head back on here. Well, I hope that was educational on how we trade the last hour of the day using 0DTE. We're using butterflies because we want to put them out of the money and be able to set up a trade where we have an asymmetric risk to reward. Typically, we're looking for minimum of 1 to 5, but we prefer to have something like 1 to 8 or 1 to 12 or even 1 to 15. And so we do that because from a mathematical point of view, that will produce a long-term positive outcome. Also, we can, using our technical capabilities with volume profile and understanding market structure and the energies that come into the market, we can put ourselves in a spot and create scenarios that will allow us to model these asymmetric trades and, using probability of touch, be able to hit a profit zone at a very, very high win rate. So here we are, we're taking small risk, going after huge profit. Of course, there's a spectrum of profit in between, the small and the large. A good portion of that time will hit somewhere along that spectrum. And about 10 to 15% of the time when we're taking trades earlier in the day, we will hit that short strike, what we call pinning the tail. And in the, oh my God, there it's going, there it is. Where are we going to end up? All right, so now, all right. So on this particular trade, it closed inside the profit curve, inside the expiring profit tent. And you'll see that had you just held it and not done anything, then you would have made about $105. And you saw at one point that we were up as high as $200-something. So, so there you are. A 15-minute trade, we make over 100%, or potentially over 100%. In this particular case, about 60% had we done nothing. So there you go. A last-minute surge put some people deeper into profit. All right. Well, there you are. There's the final hour trade in a nutshell. We're gonna be doing this every Monday, Wednesday, and Friday, and hopefully next time we'll do it, and I'll actually have a live trade on. Like I said, I know that many of our members, we have about almost 600 members now, and I'm sure many of the members had actually taken a trade because, as I said, we had talked about this setup prior to me going online. And so I'm sure that many actually will be reporting their profits. If you'd like to try out the service, it's an educational service where you learn everything there is to the system, this asymmetric 0 days to expiration system. And like I said, it's an educational system. You're going to learn the use of volume profile from our analytical methods. You're going to learn the entire system and the strategies that we employ that have to do with collecting premium at the very final hours of expiration. You're also going to learn a continuous improvement process that we put into place that allows us to perform a retrospective of all the trades that we take and then learn from what we do and then be able to improve every week as we go on. If that sounds interesting to you, then go to 0-dte.com/try. That's 0-dte.com. That's 0 days to expiration, but don't forget the dash. 0-dte.com/try, T-R-Y. And we have a 4-week trial. You'll learn an incredible amount in that trial. And if you decide to come on full time, then I'll rebate the cost of that trial. Most people that take the trial actually make enough to pay for an entire year's subscription to the service. So there's that. I'm not promising that. I'm just saying that a lot of people do end up doing that. So there you go. 0 days to expiration. Look for the podcast. Go to Apple iTunes. Search for 0 days to expiration. Listen to what I've talked about, all aspects of this trade. I think there is now about 89 episodes up there. Thank you very much for showing up and spending some time with us, and peace. I can never find the off button. There it is.